Cathie Wood, CEO of ARK Investments, is widely respected in the investment community. The pioneering electric vehicle manufacturer Tesla is well known to this channel's audience, and it's worth noting that Wood has been a long-time bull on Tesla stock, with the bulk of her investment firm's fund being invested in Tesla shares. However, Wood recently sold a large number of Tesla shares in order to purchase Teladoc shares, which Wood anticipates will beat Tesla by a factor of 100. Investors now doubt her confidence that the company can outperform Tesla because of this action. She has long been an advocate for the digital healthcare brand, and her company now holds roughly 10.95% of the company's shares. Is Teladoc better than Tesla? Where do you see the digital healthcare company going from here? Learn more as time goes on. Cathie Wood is rumored to be worth around $250 million, and she controls a number of well-known exchange-traded fund portfolios. She insists that the fund is inexpensive and ripe for growth despite suffering a significant loss in 2021. Cathie Wood has reaffirmed her belief that the best way to invest is in disruptive growth companies that will shape the future. In addition, throughout the next 5 years, these companies should expect to see a doubling of their value. Cryptocurrencies, AI, renewable energies, the human genome, robots, 3D printing, and space travel are all areas of interest for Wood. She has always been an advocate for the innovations of the present that are shaping the future. While her strategy may seem risky now, she claims it's very similar to that of Warren Buffett. The main difference is that Buffett looks for companies that are already highly valued, while she investigates those that will be highly valued in the future. In the recent year, Teladoc's importance has grown as the number of in-person doctor's visits and other health visits has been reduced due to social distance in public health standards. We are confident that its cost-cutting benefits will ensure its continued use even after the pandemic has ended. It gets the job done quickly and is quite handy. There is no questioning the remarkable success of ARK's ETFs during the past few years. In the past year, investors in the company's flagship exchange-traded fund, the ARK Innovation Exchange-Traded Fund, have seen a return of 175%. The ARK Genomic Revolution Exchange-Traded Fund, which puts its money into companies involved in gene editing and healthcare, saw a return of 186% last year. It's difficult to ignore such findings. Cathie Wood's optimism for Teladoc shares is well acknowledged. The ARK Genomic Revolution Exchange-Traded Fund has its largest holding in the telemedicine company. 7% of the portfolio is invested in the ARK Genomic Revolution Exchange-Traded Fund. It is the only asset in the ARK Innovation Exchange-Traded Fund that is smaller than its 7% weighting at 3.5%. More than 11% of all Teladoc shares are owned by ARK Invest, who paid between $148 and $172 a share to acquire their holdings. When compared to its all-time high, the stock price is down 75%. However, the company's underlying business has been strengthening. This situation has been likened by some to Tesla's in 2019, following which the company experienced rapid expansion. It could seem like the only connection between Teladoc Health and Tesla is their initials. Despite this, they are both dominant players in their respective industries. Both of these stocks have a lot of interested parties. Cathie Wood's ARK Invest Exchange-Traded Fund has piqued investor interest, including ours, in Teladoc stock. Her firm, which invests in firms at the forefront of disruptive innovation, has had a return of nearly 500% over the past 5 years, far outpacing the S&P 500's return of 92%. This is not shocking news. Our research suggests that Ms. Wood was drawn to Teladoc Health because its forward-thinking business model shares her own. We are aware that investors frequently monitor the actions of investment managers and billionaires to gain insight into promising financial opportunities. Cathie Wood, though less well-known than Warren Buffett among value investors, may prove more alluring to those willing to take a chance. She has recently made a number of strategic moves, including reducing her shareholding in Teladoc and expanding her position in Teladoc Health, even though shares of the telehealth firm have been falling since 2021. Should investors acquire shares in the company right away, or is it hazardous with Amazon as a potential competitor? The average analyst forecast for Teladoc's share price in a year is an increase of almost 50%. But Tesla isn't receiving much love from financial experts. The average price target for the company is currently lower than the price at which it is trading. So says the forecast of one analyst. It's possible that Tesla's share price will drop by 90%. Meanwhile, analysts claim that Teladoc's expansion is just getting started. Begun. Of course, most forecasters are just thinking a few steps ahead. How do Tesla's and Teladoc's long-term growth prospects stack up against one another? We still recommend Teladoc as the best option. For the sake of consumer testing, Amazon has stated that it will offer a telehealth service to its employees throughout the world. The service will also be made available to businesses. Company size, $1.5 trillion, gives it the ability to undercut competitors. It's not just Amazon that you have to worry about. Earlier this year, Cigna announced that they will be acquiring EndLive, another telemedicine firm. The insurer, following in the footsteps of pharmacy retailer CVS Health, now provides online consultations with doctors. More firms will enter the market because of how lucrative it is. One of two interpretations applies here. The sector and company strategy appear promising, so new competitors start popping up. However, Teladoc is ahead and will continue to soar because its rivals can't really catch up. A study published last year by Research and Markets estimated that the telehealth market could be worth more than $70 billion by 2026, expanding at a compound annual growth rate of 17.7%. This is because people of all ages and socioeconomic backgrounds have a need for medical care. Telemedicine has a bright future ahead of it thanks to advances in technology that will allow for the seamless integration of patient medical history, real-time health, medical insurance, and financial information to aid in clinical decision-making, elevate patients' health statuses, and reduce healthcare expenses. An expert has predicted that doctors would soon be able to access data, including the current insurance benefits offered based on a patient's health profile, in addition to understanding the patient's lifestyle. They went on to say that the potential range of computations is boundless as more data is collected to facilitate better healthcare decision-making. These advances in technology and data integration will not be without controversy, but you can rest assured that they will not prevent Teladoc from expanding. Unlike the ones that Tesla continually encounters, the stock is not cheap and comes with inherent risk, though. However, we believe Teladoc to be an excellent option if you are looking to invest in a leading healthcare provider. It has become so large and varied that it is quite unlikely to lose its position as market leader anytime soon. Therefore, we agree with Cathie Wood, whether you're a hedge fund manager or a regular investor. You may have success using Teladoc. Teladoc faces stiff competition, but the success the company could achieve in a year's time with Livongo Health and the opportunities the two companies could discover together have not been fully appreciated by investors. The stock has fallen from its highs in the beginning of 2021 due to investor anxiety over Teladoc's planned purchase of Livongo Health and its subsequent classification as a pandemic stock. Teladoc's popularity and earnings have both been on the upswing recently. Despite an increase in projections, the stock price has fallen by about 50%. The reasoning behind why backers thought people would go back to in-person visits with their doctors instead of using virtual ones. That hasn't happened, and it seems unlikely that it ever will. However, NIO, Xpeng Automotive, and Li Auto may present even more competition for Tesla in China. The company faces a steep uphill battle against rivals. Tesla has dropped the prices of its vehicles, but this is not proof that they are prepared for the onslaught that is inevitably headed their way. Even established ODMs have set aside significant resources to combat Tesla. In contrast, Teladoc hasn't been overly worried about Amazon and other rivals. The company currently serves more than 50 different U.S. health plans and 40% of the Fortune 500. Its platform is the most feature-rich on the market. A high Net Promoter Score above 60 suggests that Teladoc is well-liked by its customers. A fantastic Net Promoter Score, NPS, is 50 or greater. When comparing the two market leaders in virtual healthcare, Teladoc appears to be in a stronger position to protect its turf than Tesla is. We think it's a fantastic investment opportunity right now, and we're not ruling out the possibility that it can eventually outperform Tesla. Teladoc anticipates steady, if slightly slower, growth in the coming year, suggesting that this is a marathon rather than a sprint. We anticipate a 25% to 30% rise in revenues, which will lead to a 23% to 33% rise in EBITDA, adjusted for inflation. The administration says, from now until 2024, Teladoc's growth rate has a chance to outperform that of the sector as a whole. According to Teladoc, the target TAGR for the company is between 25% and 30%. In the United States alone, the total value of the available market is above $261 billion. The addition of new members and their participation in more and more programs will increase the organization's income. Everything points to a bright future with lots of room for growth. Do you have faith in Teladoc like Cathie Wood does? Do you anticipate a rise in Teladoc share prices? The sale of Tesla shares. Give us feedback. We're curious to hear your opinion.